Hello fellow human, nobody here with a new stock analysis. Should you buy AMD shares? As always, I will jump straight into my verdict and I will give you my reasons afterward. Let's go. At today's price of $132, AMD is a buy. My price target for 2026 is between $220 and $340 for an average of $280 per share. This means I see a huge upside for the stock in the next 2 years, so much so that it is a clear top pick right now. The performance of AMD's stock could be considered excellent if it were a bank. As a major tech player with a foot in the AI space though, returns have been what investment professionals refer to as meh. Shares have recently gone down by more than 35% from their peak of $211, returning a sad 12% in the last year. This is not only mediocre by itself, but outright depressing when compared against Nvidia's return of 130%. To be fair, it's not like the two companies have the same financial fundamentals. Far from it. But as my verdict suggests, I'm very optimistic about AMD. And in fact, the comparison with Nvidia might not be all that relevant. Let's have a quick tour around the company's operations and see what we can expect for the future. But first, let me tell you a little something else. If you're watching this, I assume you're not a lemming, but a sovereign individual. Nobody can tell you what to do with your own money. I only provide you the tools to take financial matters into your own hands. You alone are responsible for where you place your time and money and trust. So no, this is not financial advice. This is just how nobody invests. Advanced Micro Devices, or AMD, is a leading semiconductor company known for its high-performance CPUs and GPUs. It is significantly advancing against Intel and striving to match Nvidia in AI and high-performance computing. It was founded in California all the way back in 1969, a whole 24 years before Nvidia. And it was 10 years ago that Lisa Su became the face of the company as it was picked as its new president and CEO. As you can imagine, AMD has evolved quite a bit over the decades. Today, its operations are classified into 4 business segments. The data center segment, which provides high-performance CPUs, GPUs, AI accelerators, and FPGAs for data centers and AI workloads. The client segment, which offers CPUs, APUs, and chipsets for desktops, notebooks, and handheld devices in consumer and commercial markets. The gaming segment, which supplies discrete GPUs, semi-custom SoCs, and development services for gaming PCs, consoles, and cloud gaming. And the embedded segment, which delivers embedded CPUs, GPUs, APUs, and adaptive SoCs for applications in automotive, industrial, aerospace, medical, communication, and consumer electronics. The 4 segments currently have similar shares of the company's revenue, but profitability varies among them. Generally speaking, the gaming segment has the lowest margins, and the embedded segment has the highest. The client segment is the most cyclical of the 4, and went from second worst margin in 2022 to making a loss in 2023. The margin of the data center segment is the second best, but it dropped from 2022 to 2023. The company has demonstrated a great ability to focus in those areas with better growth opportunities and profitability, specifically through the data center and the embedded segments, with the capture of a very decent piece of the data center market and the acquisition of Xilinx in 2022. Xilinx is a semiconductor company specializing in field-programmable gate arrays and adaptive system-on-chip products, which are very flexible and are used in multitude of industries. Xilinx is now the bulk of AMD's embedded segment, which I already mentioned has the highest margins in AMD's operations. To give you a better idea of AMD's profitability, its gross margin bottomed at 23% in 2016 and has steadily climbed all the way up to 51%. Not bad. Sure, Nvidia's gross margin sits at 75%, but there is no need to be mean about it. With all that said, let's now take a look at how the company has been growing. In the past 10 years, the company's revenue grew at an average of 15.6% per year, and earnings were pretty much non-existent before 2020 and have been climbing since then. It should be noted that part of the 2022 revenue jump was due to the Xilinx acquisition, which also increased the share count by almost 28%. Diluting existing shareholders. Revenue stayed suspiciously flat in 2023. Does this mean that the company is having trouble with organic growth? Can it only grow through acquisitions? Let's take a look at the expectations for the future. For the coming 3 years, analysts expect an average annual growth of 19.7% for revenue and 40.3% for earnings. Needless to say, this is impressive and marks a significant acceleration compared to AMD's growth over the past 10 years. Revenue not growing in 2023 was mainly due to macroeconomic weakness and the cyclicality of some of AMD's business areas. The future growth estimates are absolutely fantastic, but as always, there is only so much you should be paying for them. Does valuation make sense for AMD at the current price? Let's take a look. The revenue multiple is above its 6-year average, while the earnings multiple is in line. However, growth is much faster now than in the past, most notably for earnings now that they are no longer fluctuating around 0. This results in a PEG ratio of just 1, which is very low for a fast-growing tech company with decent margins. So, at first glance, it would seem that valuation multiples are not at a discount. But this is short-sighted. Considering the growth expected between now and 2026, the stock will need to double for multiples to stay the same. And a share price increase of 65% in the next 2 years is the bare minimum. I'm aware I didn't mention AI as much as you probably expected. Regarding AI, all you really need to know is that A, yes, Nvidia is in a stronger position, and B, no, there is not just one winner who takes all. Should you buy Nvidia though? If only there was someone with an answer. Whether AMD might one day be equal to Nvidia or not doesn't matter for our investment purposes. Valuation clearly assumes it won't, and you should too. Better play it safe. If there are any surprises, let them be positive ones. To sum up, the strong position of the company, its capable management, its current fair valuation, and the exceptional growth that awaits all make AMD a no-brainer, excellent stock pick for the long term. If you found this video only mildly upsetting, please like it and subscribe to the channel for more. Share your thoughts in the comment section and let me know which stocks and concepts you would like me to explore in the future. If you have any questions, just ask. And until the next one, remember, if nobody invests, so should you.